and welcome to Economy and Markets TV, where we have conversations with a purpose. I'm your host, Dave Okenquist, the Senior Research Analyst here at Dent. Joining me to take you around the world of economic and financial news and covering each topic in 2 minutes or less is the editor of Boom and Bust, Mr. Rodney Johnson. Rodney, good morning.
Morning, Dave.
Great to talk to you this week, as we do each and every week, going over the big stories in the world of economics and finance. And the big one came out this morning, Rodney, about the U.S. jobs report. The U.S. economy created 136,000 jobs in September, missing expectations by a bit. A bit of note also, the unemployment rate fell from 3.7% to 3.5%.
Yep.
Looking back to August, we had that 130,000 jobs created, which was a bit disappointing. That one actually got revised up to just under 170,000. Looking for the year, Rodney, we're averaging about 161,000, I believe, for 2019. And the last thing I want to mention before I hand it over to you is the most disappointing thing of this report, I believe, was the average hourly earnings for the year. Annual growth fell from 3.2% last month to 2.9% this month, although that is still pretty healthy, sitting just under 3%. But Rodney, I believe we talked about this last month. Are we getting to that diminishing returns thing where there's just not enough people to hire?
I think we're already there. That's why, last month when the number came in at 130 and everything kind of puked, we talked about it. It wasn't very interesting to me because 1 month didn't matter all that much.
Yeah.
Clearly, they revised it higher to 168. This month at 136 when they expected 145. We're talking a few thousand people, 9,000 people as the miss this month out of an economy or a working economy, call it workforce, of 155 million people. This number is insignificant at best. And so it's kind of trend is what we're looking for here. And to your point, we're trending lower in the number of people we're putting into the workforce because, frankly, there just aren't that many. The big thing here is the culmination here, of course, in the jobs number on Friday morning. But it's all about the Fed. This is all about what's going on. I know we'll get to some numbers here in a minute about people looking at it going, hey, given where we are, the Fed needs to cut rates and not in December. They need to cut them now in October. Yeah. And so people were looking to see if this report would support or somehow push out a Fed cut. And what they got was some support. A low number of jobs, wage growth isn't really there. So they're going, look, this gives the Fed the cover they need. So people expect a rate cut.
Yeah, I mean, on the downside, what would be now? I mean, considering what we had last month, that reaction, now it seems like your point here is that the markets are kind of getting used to this lower standard in a sense. I mean, what would we have to be under 100,000? Would it have to be 50,000 for the markets to really panic?
I think so, because it's the balance, right? The markets wanted the number to not be great because if it's over 200, then maybe the Fed doesn't cut. But well, I mean, that's kind of the logic, right? But if the number's under, say, 75, we'd really have to get closer to zero than just 100. But if the number's under 75, people start going, wait a second, maybe this isn't just, a downdraft. Maybe this is the wheels coming off.
Right.
And so that's a very different thing. And so if you wanted a rate cut, this is the sweet spot for a rate cut. And I think that's what people were after. And you saw the markets bounce a little afterwards.
Yeah, and another thing that might have the Fed's eye and something that might support a rate cut was another piece of news that came out this week. The ISM Manufacturing Index came in at 47.8. Now, this is a diffusion index, meaning above 50 means is expansion, below 50 is contraction. Not good news for the manufacturing sector, which has really been revitalized over at least the last few years anyways, is starting to show some slump. Some people say we're in a manufacturing recession. Back to the jobs report, I believe the manufacturing sector lost 2,000 jobs. Yep. So this is certainly something that the Fed's going to have its eye on and more support for a rate cut, doesn't it, Rodney?
Yeah, this was the pukey number. It was the second month of below 50 reading when they expected 50, 47 and change. And to your point, this is a diffusion index. So it's not a percentage. You'll still see people say, oh, 47.8% or whatever. No, it doesn't work that way.
Right.
It's a number of things that businesses respond to a survey saying, yes, we are, no, we aren't. Hiring more people, ordering more stuff, that sort of thing. And so below 50 is contraction. You got to get down to 42, 43 before it's really a recession indicator. But still, you don't want it under 50. This is the lowest reading we've had since 2009. Inside of it, the export number, that's the one that's getting crushed, as you might expect with the trade war. It's in the low 40s. And so people are looking at it and going, the things we export tend to be the things we make, like, heavy equipment from Caterpillar. And so that's why the manufacturing side is slowing down. And so it does create this signal for the Fed that, hey, things are a little slow. But again, let's not lose sight of what's going on here. The U.S. economy at 1.8% projected growth in the third quarter by the Atlanta Fed now. We're still well ahead of most of the rest of the developed world. This is about currency. Everybody in the United States wants the dollar to be lower. They want the Fed to make that happen by dropping U.S. interest rates so that we're a bit more competitive on the world stage. We can talk about growing the economy. It's all about trying to get somebody else to buy more of our stuff. The problem is everybody else is trying to do the same thing.
Yeah, so could it be more the weakness around the world for the weakening exports, or more so than the trade war?
Yeah, and this is the thing, right? I've written a couple of times, look, even if the trade war cleaned up tomorrow, I think the Dow would jump, 1,000 points, 1,500 points. Yeah. I think that is the best sell indicator out there this year, because people are going to expect this huge return to exports. And your question should be, to whom? Who's going to buy this? We have the European Union kind of in a funk over there because car sales are down and they're dealing with the Brexit. You got the Chinese dealing with their own debt funk going on. And so there's not some group out there going, wow, if they just lower tariffs, I'm going to buy a bunch of their stuff. Yeah. And so I think what we see is a lot of expectation built into this. And when we get the trade deal, we don't get the export follow through that we want. And everybody goes, wow, we really are in something of a global downturn. Yeah, we are.
Yeah, absolutely. And speaking of the trade war, we've pivoted to a new front, beginning with Europe, following $7.5 billion of levies the U.S. is passing against imposing against the European Union for aircraft and food products. Now, this one was approved by the WTO, referencing the EU subsidizing of Airbus. So at least in this sense, you're sort of going through the right channels, I would think, Rodney.
This started in 2004, really 15 years ago. And this is not trade war stuff. This is normal tariff stuff. A lot of countries have tariffs to support or defend different industries. And so the Europeans have used government subsidy financing to support Airbus, a European airplane manufacturer, forever. Yep. And so it's Boeing's big competitor. And so, the U.S. filed in 2004 at the World Trade Organization, said, hey, this is wrong, and we're going to put tariffs on other stuff because of it. And here we are 15 years later, they finally got a decision out that said, yeah, this is wrong. $7.5 billion worth of goods when we buy $200 billion worth from them every year. It's not a big number. It's symbolic. Chances are next year when they get their go round, the Europeans will slap some tariffs on some of our stuff in response. But this is small potatoes. The big thing, of course, is still China.
You mentioned Scotch drinkers might have to pay a bit more, right?
Yeah. Scotch drinkers are going to have to pay more. People who buy Italian cheese are probably going to have to pay a bit more. Yeah. But man, if you're eating chocolate, you're lucky because that was excluded. It was amazing the things that were excluded tended to be at the high end. But anyway, it's an immaterial number unless you happen to be a Parmesan manufacturer in Italy. Then it's a big deal.
Yeah, or they tend to be the ones that have the most political influence on the decision makers to carve out those exemptions, possibly.
Imagine that. How does this work, right? Political influence and money. I have no idea how they go together.
Although I will say I prefer bourbon, so that doesn't bother me one bit.
You buy yours from Tennessee. There you go.
There you go. One more thing while we have time, Rodney. There was a ruling in a case. I believe the state of New York was suing the federal government over the SALT deduction, and that got struck down. You want to talk just a bit about that?
Yeah, it goes back to tax reform. Part of the way that they replaced some of the revenue, certainly not all of it, was by capping the amount of your state taxes that you could write off your federal income tax. Well, in low income states or low property tax states, it didn't really matter that much because people didn't have a lot of write-off. But in high property tax states, California, New York, New Jersey, Connecticut, this is a big deal because the average guy has more than $10,000 in local taxes. And so the cap at $10,000, it meant that a lot of people who were able to write off $30,000, $40,000, $50,000 in property tax now cannot. And so their federal tax bill went up. And so they're looking at their state going, hey, wait a second, I used to could write this off. Yeah. State of New York said, hey, we've got two things we're doing here. One is we're going to create a charitable contribution to the local property authority for anything over 10,000. The other thing we're going to do is we're going to sue the federal government for infringement on our decision making. Well, the IRS already disallowed the charitable thing and said, nope, that doesn't work. And now a federal judge said, look, federal government didn't say anything about your decision making. You're free to put taxes on people and enforce them how you see fit. They're just talking about federal taxes. It's probably headed at least to district court, if not circuit court, and then eventually Supreme Court. But it's all about who has to pay. And frankly, I'm not upset about this because, I mean, yeah, I pay some property taxes here in Texas. This is telling people in New York, California, New Jersey, and Connecticut that you live in a high property tax state. Maybe you ought to think about redoing your tax structure.
Yeah, well, we'll see about that. Interesting to see where this thing goes.
Yeah.
Well, that's all the news from this week, Rodney. Next week, looking ahead, we're going to get minutes from the last Fed meeting. We're going to report on inflation, and for you and I, partner, we are going to be at the Irrational Economics Summit outside Washington, D.C. in the latter part of next week. Really looking forward to that. I'm sure you are as well.
Yeah, I am, and we won't be doing this video next week because we got a lot of things going on, but we'll still get the digest out the door in written form.
Yep, absolutely. And I want to encourage you all to keep sending questions and comments to tv@economyandmarkets.com. For Rodney Johnson, I'm Dave Okenquist, and this has been Economy and Markets TV.